Suggestive measures for Nepal's monetary policy for 2017-18. Some critical observations by Shanker Man Singh. As with previous tradition of bringing out monetary policy after the government presents the budget, Nepal Rashtra Bank (NRB) is busy in making public the monetary policy for 2017-18. Monetary policy is the process by which the government, central bank, or monetary authority of a country controls the supply of money, availability of money, and the cost of money or rate of interest, in order to attain a set of objectives oriented towards the growth and stability of the economy. Suggestive measures for Nepal's monetary policy for 2017-18. Some critical observations by Shanker Man Singh. As with previous tradition of bringing out monetary policy after the government presents the budget, Nepal Rashtra Bank (NRB) is busy in making public the monetary policy for 2017-18. Monetary policy is the process by which the government, central bank, or monetary authority of a country controls the supply of money, availability of money, and the cost of money or rate of interest, in order to attain a set of objectives oriented towards the growth and stability of the economy. The banking community of Nepal is of the view that central banks should make effective use of the policy rate to ensure price and financial stability. As such, policy rates are used everywhere to manage consumer prices and market interest rates. But that has not been the case in Nepal. NRB should use policy rate as an effective monetary tool to contain inflation and keep market interest rates within a certain range. As such, the monetary policy is generally referred to as either being expansionary policy, or a contractionary, where an expansionary policy increases the total supply of money in the economy, and a contractionary policy decreases the total money supply. Expansionary policy is traditionally used to combat unemployment and a recession by lowering interest rates, while contractionary policy involves raising interest rates in order to combat inflation. Monetary policy should be contrasted with the fiscal policy, which refers to government borrowing, spending and taxation. In the international community of central bankers, there is widespread consensus that the primary goal of monetary policy must be domestic price stability. Price stability, however, is only a means to an end, and not a final goal of overall macroeconomic policy. The ultimate goal is determined by governments and is normally linked to the objective of maximum economic growth, development and the creation of more employment opportunities. The most important question has never been raised. It is, can an open economy like Nepal that is maintaining a fixed exchange rate with its major trading partner follow an independent monetary policy and inflation rate? Our routine answer is no. Unfortunately, the policymakers will never learn. Notwithstanding comments in the past from several institutions and individuals, it may be recalled that the International Monetary Fund (IMF) has explained as early as January 2001 how monetary policy in Nepal should be conducted. The initiatives taken by the government last year for the establishment of an infrastructure development bank is a welcome step. However, the setting up of one institution will not be sufficient to effectively address the issue of adequate mechanisms for funding megaprojects requiring huge long-term funds. Therefore, we should also think in terms of setting up of other new institutions, as well as formulating and implementing policies that would facilitate such development process by providing long-term funds. A list of feasible PPP projects should be developed and gradually implemented through the involvement of various multilateral agencies including Asian Development Bank, IIFC etc. Challenges. The biggest challenge Nepal is facing is higher consumer prices. However, this year the growth rate projection for the next year has been targeted as 7.2%. The need now is to sustain inflation in single digit. But how? The country may face another type of problem as remittance growth rate has started declining marginally. Nepal is currently enjoying a balance of payments surplus despite huge trade deficit. Because of higher inflow of remittance, which used to be working as a safety valve in Nepal's economy for about a decade and a half. Also, foreign exchange reserve stands at almost 50% of the gross domestic product because of higher remittance inflow. Since Ashwin 2073 BS, Nepal is facing a problem of credit crunch. This has resulted in the lending interest rate. This has a resultant effect on the overall employment will decline, GDP will slow down, employment opportunities will be contained. The industrial cost of production will increase because of the credit crunch. The export competitiveness capacity will diminish, and there will be significant increase in the import of the commodities. Now the export-import ration is 1:8. The prevailing situation will further aggravate the problem. Select suggested measures for the monetary policy. Just to recapitulate, in February, the Central Regulatory and Monetary Authority has relaxed the method to calculate the credit-to-core capital deposit (CCD) ratio in the revised monetary policy of the current fiscal year. The revised monetary policy has applied the brakes on auto loans and personal overdrafts, which are considered unproductive sectors. The revised monetary policy has lowered the maximum threshold of personal overdraft by 25% to 7.5 million rupees from 10 million rupees. The concerned authorities opined recently that there is a decline in remittance income growth rate and ballooning trade deficit. Nepal's external sector may come under pressure. Those banks complying the statutory liquidity ratio (SLR) should be allowed to open the bank account in other banks and the financial institutions. The definition of the productive sector should be revised and should encompass the sectors like infrastructure, daily necessity products, miniaturing industry like cement, sugar, bricks, iron, RMG, paper, food, leather products, shoes and sandals, biscuits, etc. The cash reserve ratio for the commercial bank, development bank and the financial institutions should be brought down to 5%, 4%, and 3% respectively. The consortium lending for more than 500 million should also be reviewed. Investors and industrialists are lobbying for the revision on requirement of consortium loans for credit worth more than 500 million rupees, as that will increase the cost of doing the business. Establishing industries and some sort of syndicate on will prevail. The stock market, which constitutes about 80% in the listing as well as trading, has shown remarkably good indications and doing well. The monetary policy should view these developments in the context of formalizing the margin lending and sustaining the NEPSE index in a sustained manner in the forthcoming monetary policy in close collaboration with the stock market regulator SEBON, with a view to have sustainable, high, inclusive and broad-based economic development. The lending done through the final sector should be 30% in the productive sector. Nepal should pursue the policy of cashless economy, card economy and the digital economy. In order to facilitate the grant should be given for the purchase of POS machine. The paid-up capital of about 2 billion be allocated from the government for the establishment of the infrastructure bank. For the large infra projects, the single obligatory limit be increased to 50% of the paid-up capital as in the case of hydro projects. The impact of goods and services tax (GST) in India should be reviewed, assessed, and the conducive environment, like all the industrial imports from India, should be treated in the foreign currency. In the operational aspect, the banking transition should not be halted for more than 3 consecutive days, in order for the opening of the LC. Also, it has a negative consequence. So, it is advised that the holiday should not exceed more than 2 consecutive days. The check-in clearing should be done on Friday also. The banking holiday should be in line with the international holiday of Sunday and Saturday. Previously, the banks used to be closed only for 15 days as the national holiday. Now it seems that the holidays are in tune with the government holiday. This is not practical, advisable, and just to the society, at least for the economic development of the country. The study done by the NRB on the impact of Indian budget on Nepal's economy should be made public, and the consultation with the private sector should also be taken. The former president of the World Bank had said that though government may come up with best financial and monetary policy, but if the country is not managed by good governance, the objectives laid down by the financial and the monetary policy cannot be achieved. This remark is still relevant in the present-day context of Nepal and the Nepali monetary sector. The formal launching of the monetary policy in Nepal has a very limited history, probably less than 2 decades. The divestiture of NRB investment in NEPSE and the offloading of the share should be done without delay to prevent the case of conflict of interest, and government are not supposed to do business principle. The central bank is a regulatory body and must withdraw its shares in financial institutions even though it can invest some capital while establishing them. Its shares in different institutions including Nepal Stock Exchange, NEPS, RMDC, Rastriya Bima Sansthan, Deposit and Credit Guarantee Corporation, DCGC, and others must be sold. A regulatory body cannot act as a commercial one, and the governor must take initiative to ensure that it will not be, otherwise, to expect more from him, as he has adequate knowledge about the capital market, and is in favor of free market economy. The export credit facilities of 4% should be available to all the exportable products irrespective of the volume and or the value of the export. The demonetization of the Indian rupee has a negative impact, and the money earned from the legal activity should be given the opportunity to cash those denomination. NRB should take the lead on that. With a view to reverse the issue of credit crunch, government should significantly spend the capital expenditure. The interbanking lending is limited to 7 days. This should be increased. In sum, the key objectives and focus of the monetary policy should be to remain broadly unchanged compared with the current situation, ensuring price stability, and explicitly or implicitly supporting employment and economic growth depending on the mandate of the central bank, smooth provision of liquidity and functioning of the payment system. Broader financial stability considerations are assumed to be taken into account to a greater extent than prior to the crisis. This is motivated by the recognition that financial stability is essential for achieving inflation and growth objectives, even if financial stability may not become a formal objective of central banks, and if other authorities will be tasked with fulfilling this general objective. Shanker Man Singh, PGDIM, Delhi School of Economics, TIS, Bangkok, SEC, USA. Former Executive Director SEZ Development Committee, CEO NEPSE, Board Member RBB, CIT, CDSC, NEPSE. Currently with CNI. However, the views expressed are his personal and has nothing to do with the organization where he is working.